Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue our work using the indicator, acceleration, deceleration oscillator along with the volume. We are looking at the combination of these two indicators to work in such a way that we are able to optimize the entry and exit points and get the entries as per the trend. So now let us head to the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the algorithm development quite easier to understand and equally easy to execute. All we have to do is spend some time, just a couple of hours, and you are more than ready to get started with the algorithm development. In the last two sessions, I had demonstrated to you how we can get the instrument subscription done, where the Euro USD was used as the instrument of choice. Afterward, the position amount was defined at zero. I had added these two AC blocks, the acceleration, deceleration, oscillator indicator blocks with the parameters of the hourly candle period and the lookback period of 1 and 2 respectively. We are also considering the volume data. So for that, these two volume indicator blocks were added. And to look at the price volatility, we are also taking the help of info candles of these get historical candle. All right. And then these calculation expression blocks were utilized to set the variables. Here, this was the variable with a value of 10 pips, which we are considering as a criterion for looking at the actual difference between the last hour's closing and opening price. And later on, I have also added this another AC block to look at the prior data. So it has a lookback period of 4, and these variables were created while defining the entry points for the buy trade. And on the lower side, we have this setup ready for the execution of the buy trade. So this is the development so far. Now for this session, we will be working to create the mirror image of the buy side. We will be looking to design a formation for the execution of the sell trade in a profitable manner, and the formation is going to be more or less like a mirror image of the buy side. So all we have to do is invert the conditions for the execution of the trade and look for the trade entries where we feel the momentum is now turning from bullish to bearish. So for that, we will be considering the output value of the acceleration deceleration oscillator for last couple of hours. We will compare the last 1 hour's AC output with the AC output of the prior hour, and then we go back in time and we consider the AC output of the hourly candle which had closed 4 hours back, and it should have been in the bullish territory. And afterward, the momentum turned bearish, and we saw significant momentum where the AC indicator output should have more than doubled in the last 1 hour compared to the prior hour. And at the same time, we also want the market participants' interest to go up. So we need the volume output to also double. And only if both these parameters are being satisfied. Sorry, Janice. All right, see you on Monday. Now, getting back to the formation. So we were talking about the entry, optimizing the entry for Euro USD using these AC2 and the volume output. So for that, we are looking for the last couple of hours data. And as I said in the start, we are going to compare these output values of the last 2 hours on both fronts, the AC output and the volume output. And here we need the last 1 hour's the volume output to also be more than double of prior hour's volume output, and same thing has to hold well for the AC output also, and it should be in the negative territory. The negative value needs to be on decline. So you can say we need the AC2 output to be digging deeper into the negative territory. So that's what I mean by more than doubling. It should not be rising, it should be declining further. And on the price front, on the volatility front, we need the closing value to be lower than the opening price by at least more than 10 pips. For Euro USD, we are using this value as on most of the occasions, the hourly ATR, the average true range for the Euro USD tends to be about 10 pips. So I feel if the momentum was sustained in the last 1 hour with its closing price being more than 10 pips below the opening price, that means the price momentum is reliable enough and we can go for the new trades. So that's what the formation is all about. Now we head back to the Visual JForex board, and here we will have to start defining the conditions using these if else blocks. We are going to need 9 of this, as we had used 9 of these on. And first condition is going to be revolving around these negative values. It should be below 0. So we want the negative 12 to be in actual negative territory. So I will compare it with 0. First input less than second input. Negative 17, which is the penultimate R's AC output. It should also be in the negative territory. So again 0, it should be less than 0, first input less than second. Then we go back 4 hours in time and we consider the AC output positive 26. It should have been in bullish territory, so we need the positive value to have been above 0. Okay, first input greater than second input. After that, we will have to get some calculation expression blocks to look at the actual values of the last 2 hours AC and the volume, and we need the condition that this negative 12 should be at least twice or more than twice of negative 17. So for that I am going to need calculation expression block, not this one. So I'm going to take 3 of these calculation expression blocks. All right. Now let's do the calculation, actual calculation, and we need negative 12 to be twice of negative 17 or more than that. So I am going to multiply negative 17 with 2. and we had defined the TM as the variable with start value of 2. So I will take same variable here, edit variable, it has a start value of 2, negative 17, A1 into A2, I will name it SOE. We also have to do similar calculation with the volume. So I will take volume 18 and we multiply it with Tm. So this will be A1 into A2, and this will be named as SOV. All right. Then we also have to consider the difference between the last 1 hour's opening and closing price. So for that, I'm going to take candle 19's closing and opening price, and the closing price needs to have been less than opening price. So here we are going to deduct the close price from the open price. So first variable will be candle 19 candle open, and then we deduct candle 19 candle close. So this will be A1 minus A2. And this will named as SACD. All right. Now coming to the conditions revolving around the AC2 output. So we take this twice of negative 17 as the second input parameter, and we compare it with the last 1 hour's AC2 output, which is negative 12, and negative 12 needs to be less than SOA. So first input less than second input. All right. Now we do the same for the volume data. Last 1 hour's volume, which is volume 13, it needs to be more than twice of prior hour's volume. So here first input greater than second input. Then we consider the difference between the last 1 hour's opening and closing price, which needs to be more than 10 pips. So for that, I'm going to take the actual difference and compare it with 10 pips, the predefined variable. All right. So first input greater than second input. Now I will arrange these blocks which we have utilized to define the conditions on the lower side. So it becomes more aesthetic to look at and also easier to understand the flow. Now coming to the actual execution of the trade. For that, the execution will happen as soon as the price starts to drop below the last 1 hour's closing value, which is the candle 19 candle close. So I will take candle 19 candle close as the common input in both these blocks, and we will compare it with the 10-second data, 10-second candle closing values. The penultimate 10-second candle should have closed on the higher side, and then the last 10-second candle should have closed on the lower side. That's when the execution will happen. So here we have these two 10-second candles, candle 21 and candle 22nd. Candle 22nd, which has a look back period of 2. It should have closed on the higher side. So first input greater than second input. First input greater than second input, and then candle 21st. Candle close. It should have closed on the lower side. So first input less than second input. Now all we have to do is get the trade command block, which is going to be a market open at market for the sale trade, and we have to define the input parameters. First input less than second input. Default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage of 2 pips. Stop loss and take profit, we keep the combination same as was the case with the buy side, which is 1:2, 15 pips of stop loss and 30 pips of take profit. So we will hard code these values here. We won't be keeping it dynamic this time around. Okay, so as I see, the formation is complete. To make sure the trade iteration flow is going till the very end, I will color code it and have a look. Yeah, it is working fine. So we have a functional algorithm involving the indicators, acceleration, deceleration, oscillator, and the volume. We have looked to define the entry in such a manner that we will have a higher chance of ending the trade on a profitable note. But of course, we can't be sure every time. all we need is high probability. So for finding it out to see if it is indeed profitable or not, you will have to make it and then you have to test it on the historical data, which you can do it for months or even years using the JForex platform. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. We also provide the JForex platform for carrying out the testing, as I said earlier. So all these useful links have been provided in the bio. Thank you all for joining in. Have a fabulous weekend. See you on Monday.